financial inclusion movement in our country, especially in Andhra Pradesh, has entered an interesting phase. Thousands of households that have benefited from government payments through a unique business correspondent model now want the government and the financial system to take the movement to the next level. We have leading state leaders, policy makers and regulators discussing strategies to reach out to every household in the state and provide more banking and insurance benefits. The Andhra Pradesh Financial Inclusion Summit kicks off with some frank personal perspectives by R.K. Nair of Insurance Regulatory and Development Authority.
We have a young population which has great expectation. We are going to have a large population of people who are going to age because of the longevity. An average Indian, the lifespan is going to be about 70, 75 years in another 5 years. And therefore, if you project a 75-year lifespan for an average Indian, you will have about 13 to 15 crores Indians by 2020. And they also need financial security and stability. And therefore, products which will look at old people, like pension products, annuity products, these are going to be challenging times for finance. It's also going to create opportunity. Demographically, India is in a very good position to attract foreign capital. Needs money. If you look at our overall, growth, we need foreign capital because our savings is not enough to take care of investments. There's always a 3%, 4% gap between savings and investment. And how do you fund investments which will lead to growth? You could borrow money in the international markets, which are very expensive, or you could get an equity. And long-term equity is probably a better way because it's sticky, it remains, and then you're able to grow the country. And once you grow, there's a virtuous cycle of growth, employment, and lower fiscal deficits, lower inflation, and it will ultimately be good for the country.
Let's get some initial thoughts going with our panel, starting first with you, Mr. Rao, because you've been looking at things and issues that concern rural India. The talk about upliftment, the talk about being included into the mainstream when it comes to financial services. How far have we progressed?
As mentioned, the challenge is quite huge, particularly if you look at Eastern India, Central India and also Northeast. We have a long way to go because the banking outreach, whether the reach as well as the how the people are accessing services, actually it's appalling. I worked in Eastern India for many years at the field level. The CD ratio is close to 15, 18. That means virtually there is nothing there. There is no business opportunity or economic activity. It's a vicious cycle. So how do you make it to a virtuous cycle? It means more investment is required. So when we talk about financial inclusion, we should not stop where just opening of accounts, etc. We have seen lakhs and lakhs of no-frills accounts have been opened, but we have to go beyond that because there is crying need for credit in rural India. That's what our evaluation and research studies say that. Like our agriculture is actually cultivators. More than 70% farmers do not have any access to formal credit. So what is the access is that money lenders are the pesticide owners or the fertilizer shop, they decide. So it's a vicious circle. So we have to come out of that, but banks traditionally they have their own problems of reaching out, the service costs, etc. We have been talking about for decades. But thanks to the technology, the penetration is more now. We have seen some examples also.
However, why the go slow approach, you think? Has technology been a barrier till now? Or is it just that it hasn't made too much of business sense until, a breakthrough is reached?
See, I think there are two things. One is the mindset and second is skill sets. I think both are important. That, okay, having emotional kind of a this thing, empathy is all fine, but ultimately, unless it's backed up by a kind of skill set, I think we will not be able to make much progress. So if we see the history of the whatever name we call financial inclusion or helping the poor people to generate more economic activity and all. So there are two things. I think a lot of conversation about the FI and a lot of debates, a lot of dialogues. I think two things we should not forget that I think the whole success would kind of progress we achieve around these two things. One is affordability, second is accessibility. I think for a long time to come, they look like they're competing kind of objectives. So we had one sector which demonstrated beyond doubt their accessibility providing it, but not affordability. And we have other sector like banking which probably demonstrated affordability by the low interest rate and all that, but somewhere probably found wanting in the accessibility and all. But I think now time has come where they are slowly converging now. The process has already started. That's why Reserve Bank has consciously taken for a bank-led model and not for the telco model or a kind of ICT model and all. I think for a long time to sustain, unless you have bank-led model, probably you will not have financial inclusion in the true sense. So people talk about M-Pesa, Gcash and all that, but I think we should not forget there are basically payment systems, they are not banking systems. So payment is just one product of the whole banking. So unless you give a suite of products, loans, the payment product, remittance products, insurance, I don't think one can generate any kind of economic activity. So I think the bank-led model that Reserve Bank of India has consciously gone for it, I think it should work and all. So have the banks not done anything or not done enough? So one important technology trend which we need to probably articulate and then adopt is that physicality is going so far as technology is concerned. What does it mean? Be it cash, it's more and more we are going for, I don't say cashless, but less cash society. The cards would also disappear in course of time. I think the way forward is mobile. That's one instrument, I think, where you already have a huge base and all that. Can we develop a kind of business model and an operating model using the mobile? So while the technology diffusion is happening very fast, if you see again technology diffusion, landline has taken 50 years to reach a critical mass. And that critical mass Facebook has just taken 1 year. So again, it's a question of physicality going. The Facebook is, I think, is a classic example of this thing. One of the most important technology trends which should be, I think, of help. But coming back, I place my bet on the business correspondent model. Business correspondent. See, we already have more than about 100,000, but the country needs about more than 1 million business correspondents. If we build an institution of business correspondent, having seen that, I think probably financial inclusion would give a great push, because we can't go for self-service banking in all these 600,000 villages. You need somebody, human intervention is required for this technology as well. So BC to me is the critical component of the entire fulfillment of the financial inclusion, because let us not forget the basic purpose. The whole purpose is to improve the livelihood. Sure. So that can happen only probably when you start giving the loans. As somebody said, only 9% have got credit. I don't see it as a challenge, I see it as an opportunity. There are about 90% of the people who are waiting, especially banks who are telling that our credit growth has slowed down. I think it is an opportunity to about 90% of the people go and do it.
India being so varied in culture and demography and everything, we can't be copying any model, because no model fits in here. We need to develop model as per the problem, and there will be 1,000 problems and there will be 20,000 solutions for that.
Meenakshi, come in on this. The question of whether it's really a technology barrier that we are trying to overcome, or is it more about mindsets? Is it more about the will and creating those institutions that will actually take it to that last leg?
Financial inclusion is a reality only if the burden of financial growth is first tackled with. So what has to happen first? Whether we start with the banks where there is no money to be put in, or we start with the growth project so that the money is brought in.
But having said that, wouldn't you agree that, even in areas where, a farmer would be marginalized or even in distress, he would still require credit whether it's to, buy.
So we need policies. We need policies to fill in those gaps. We need policies if there is a weaver whose products is not getting sold. So we want those products to be sold so that there is money coming in, and bank can be a very utility which can be used for bringing in money and sending products out. Maybe a tie-up with a marketing agency and a bank. So innovation, that's where innovation lies, and I think the opening address itself talked about innovation, and we can't India being so varied in culture and demography and everything, we can't be copying any model because no model fits in here. We need to develop model as per the problem, and there will be 1,000 problems and there will be 20,000 solutions for that. So if you are dealing with weavers, you have a different approach. You're dealing with farmers, you have a different approach. You are dealing with women working at home, you have a different approach. You have self-help groups in Andhra, you'll have a different approach. You have a self-help group elsewhere, you'll have a different approach. So approaches needs to innovate itself depending on the growing potential of the society, and that is the only way financial inclusion is possible.
Let's get some thoughts from Pawan as well. Pawan, at CRISIL, I mean, is there any interesting trend or data, sort of any thoughts that you've come across when we're talking about getting banking, getting some of these products to that last mile?
Yeah, I think the first step that we are trying to do is in terms of focusing on when we look at inclusion. I think it is very important to look at how do we measure. And I think a lot of statistics that today we discussed, we talked about there is a large path to cover. But if you go a little more deeper and look at, we talked about on average when we look at numbers, they actually hide the fact that there is a large amount of disparity. Just to give you an example, we have about 10% of our branches in top 10 Indian cities. And there are 10 districts in the country, mostly in Northeast, where there is only one bank branch. I think when we look at averages, it is something, therefore this aspect is hidden. And therefore it is important that we measure, and therefore over a period of time set targets and goals where, and our efforts are, instead of lifting and focusing on average, is focused on where is it that the maximum effort is needed. And how do we do that? If you look at an example of when we set a target, are we able to achieve it? Maybe not entirely, but if you work effectively, you are able to do it. A good example is, I think 2 years ago, the Reserve Bank and Ministry of Finance set together a target to say, along with all banks, that we want to reach 75,000, close to 75,000 villages, which have population of more than 2,000 people. And March 12 was the deadline that was set. And because it was an effective, clear target that was set, you've seen that achieved early enough. Is that enough? I think clearly not. How is it that it was achieved? It was achieved using both, I think, the aspect that we discussed today, innovation in terms of getting in newer kind of modes of reach out to happen. There was a way in which a stripped down version of a banking branch is something that was adopted. There was a banking correspondent model that came in. There is a partnership that is required with technology companies, with mobile companies, and all of that has enabled us to reach where it is. The second aspect that I would say is, which is important is, and I think again that we discussed, that it is not enough that we open no frills account. It is important that people are using it. And then therefore we have to have a very active financial literacy program of a different order. Financial literacy to make people aware that this is something which will improve their life. It is something that will allow you credit. Credit is available in informal sector into rural households today, but the cost of that credit versus the formal sector is very, very different. And I think it is inability of the people to look at or conform to the guidelines, which is there has to be some amount of process that is required to be followed for accessing formal credit.
Do you see more confusion going forward before there's clarity because of UID, before of smart, the smart cards, and there's the government, central government, and there's state government with their own plan?
No, there is, I would say, confusion is there, but in terms of the interest is in the sector itself. There is interest in the sector, that's why there is confusion. So if the interest is not there, there will not be any confusion. So while I see UID coming up last couple of years, and they've done 20 crores accounts, and now we are seeing through them probably the direct payment being monitored. There is Ministry of Finance which is also looking at the cluster RFP approach. Like my panel member said, 75,000 villages were covered in the last couple of years, but then the Ministry of Finance came and said we'll do a cluster RFP, and then because the thought was, while the 75,000 villages have been covered, where is the transactions which are happening? Some of my panel members also talked about the same thing. Accounts have been opened, but transactions are not happening. Just to give you a little stats, our system of financial inclusion, we don't have too many data, so to say, but I can talk about FINO per se. We have 50 million account customers, of which we do 10 million transactions per month. And the amount of cash which we handle is about $200 million, about 1,000 crore rupees a month. So,
And this is primarily benefits being transferred out?
It is both benefits, it's financial.